What's up, everybody? So today we're gonna be going over my personal, basically what model I use personally for my funded accounts or my live accounts. So when you guys pass your first funded accounts, okay, this is going to be your PA accounts or your Express accounts depending on what platform you're gonna be with. So me, I use Top Step and I also use Apex Trader Funding. So with the title of PA model. PA is what Apex uses, but if you're with Top Step, then it'll be Express accounts. And then I think with Take Profit Trader, I believe that's the name of the firm. I think it's called Pro accounts. And then I'm not sure what my futures, my funded futures. Yeah, I'm not sure what they use. So, but this is basically what my model is. I call it the macro market maker model, and this is my personal model that I use to trade. Okay, and with this model, you will be basically, if you do this correctly, and you do this mechanically, and not impulsively, you can benefitly use this to your advantage, and basically, it is a pretty high win rate model, as you will catch wins multiple times a week, sometimes every single day of the week, and also at the same time, you are able to catch more than 1 to 2s and 1 to 3s, but it's preferred to catch 1 to 2s. So for the model, these are the entry criteria. So for number one, we want to wait for the 9:30 manipulation or displacement move. We do not want to enter on the Judas swing. Okay, so when the manipulation happens, this should occur between 9:30 and 9:50 a.m. And this is before the macro time starts. Macro time starts at 9:50. We want to wait until 9:50, and we want to just pay attention to the Judas swing that's about to happen during 9:30. Now, the Judas swing is not always going to be taking out a level of buy side or sell side liquidity. When we do the Judas swing, or when we have the Judas swing, it can do multiple things. It can either displace through the intended direction towards the drawn liquidity, and then go towards some type of inefficiency that it created with the displacement. It can also take out a level of buy side or sell side with a turtle soup, or just taking out a level of liquidity. What it can also do is it can come up into some type of PD array that can be an order block, a breaker block, a mitigation block, or even something like a new week opening gap, or even a simple inefficiency or fair value gap. Number two, we want to pay attention to the 9:50 macro time for a retracement reversal or a second manipulation move. Now, in this macro time, it starts between 9:50 and 10:10 a.m. This is New York. Okay, this is the second macro time of the New York AM session. So, number two, we want to wait for 9:50 and we want to pay attention to when the retracement, reversal, or manipulation move happens. After that, number three, we want to possibly enter with low size. This will be our low risk entry. Now, this will be a possible turtle soup. It can be a mitigation of a SIBI or a BISI, something that is a little bit higher risk, but that could benefitly give us a higher risk to reward ratio based off of that earlier entry. Now, you don't have to enter here. I advise you not to. You can if you are confident enough in it, but I would recommend you not doing this as your definite entry here. It's just a possibility. Okay. Number four, we want to pay attention for a breaker to form or an inverse for value gap to form to be created during the macro time, and this will usually be towards the end of the macro. Okay, so this will usually be after 10 o'clock, but it could possibly occur before 10. So between 9:50 and 10 o'clock, it could be created there, but we want to be looking for 10 o'clock to 10:10 a.m. for it to be created in between those 10-minute time frame right there, and it usually will be created then. Number five, main entry will be on the breaker or the inverse for value gap. Okay, and when this breaker or inverse for value gap forms, we do not want to enter at mean threshold of the breaker. We do not want to enter on consequent encroachment of the gap. We want to enter on the open of the breaker and open of the gap, because if we have IOFED on either of them, institutional order flow entry drill on any of them, then we are fucked, okay? Just totally fucked. And also on the inverse fair value gap, you do not have to enter on the open of it. You can basically enter on the close of the candle, basically. So that's what I would prefer you do. You are going to have a bigger stop loss, which means your RR is going to be a little bit smaller if you don't catch as many points or handles, but it allows you to have a little bit more room with your trades, okay? And finally, your target will be a 1 to 2 RR, and you'll be trailing your stops with the market maker model, okay? And I'll explain how this is going to be occurred with the model. I'll show you 5 examples after this, but you are preferring to get a 1 to 2 RR. If you can get more, that's great, but if you are in Apex, specifically Apex, you have a trailing drawdown, but you also have your drawdown that increases without taking your profits. So for example, let's say on Apex you have a $50,000 account and you just got the eval, and then after that you take a trade with, I don't know, 1 mini or something like that, and then you're up $500. Without even taking your profits, your drawdown will increase when your equity goes up. So your drawdown increases with equity. Your drawdown doesn't increase with your profits. So no matter if you take profits or not, if you had a positive equity without even taking profits, your drawdown will increase. So just letting you know, that's why we are going to be targeting a 1 to 2 with this, and not trailing and not basically trying to get as big of a RR as possible, because of the possibility of the trade reversing on us, returning us to break even on the day, and then hitting our stops at break even. Because if we hit our stops at break even, you know what that means? We have 0 profit, but our drawdown increased, so that makes it pretty much bad for us. So if we can take profits as much as possible, but with a higher profit to risk reward, then that will benefit us in a scalping method, okay? And obviously once you get to that break even point on the basically the drawdown, so basically at flat at 50k, you know, that's when we can start catching higher RRs. But for now, until we can reach that threshold, then we want to be scalping as much as possible. So catching 1 to 2s and 1 to 3s as much as possible, even 1 to 1s if you prefer that as well. But you know, and then an extra thing is make sure all time frames are aligned. So make sure the 4 hour, the 1 hour, the 15 minute, 5 minute, 1 minute time frame, they're all bullish or all bearish, okay? Now, for example 1, okay, for the 9:30 manipulation move, remember, this is the first thing we want to wait for, the 9:30 manipulation move. We see we have a manipulation move at 9:30, we come up, we have failed displacement above all this buy side liquidity pool here, having a turtle soup right after. See, we drop right back down during 9:30. During 9:30 and 9:50, we basically displace all the way down into here. For 9:50, the macro time starts. We're going to wait for a retracement, reversal, or manipulation move. Once we get that, and what is the thing that helps us see that it will be one? First of all, we tapped into some type of higher time frame PD right down here, but also at the same time we had a 1 minute SMT at the lows. So giving us that's a possible reversal for us to anticipate us. Now, no matter if we're going to retrace into equilibrium or we're just going to totally reverse it, take out buy side, we anticipate that SMTs are going to reverse no matter what. No matter what, it's going to go in the opposite direction based off of the SMT. So because we got that SMT, next thing we want to wait for is some type of inverse for value gap to be formed. Where do we get that? We get that first inverse here. You could have entered here, but that second inverse, since we have 2 inverses from the displacement, if you can pay attention to the older videos that I had made, this first one would be our breakaway gap. This is going to be our breakaway gap. This first BISI will be our breakaway. Second one is our fractal. We are basically going to enter off of that fractal, or off of this second inverse. So this second inverse right here, or this second BISI right here, will be our entry. Obviously, you want to enter up here, but for example, we're just putting our entry down here at consequent encroachment of the gap, and stops are obviously going to be right at a counter close below the BISI, but you're going to loosen it up a little bit, so leave it a little bit more room. Targeting 1 to 2, or obviously can target buy side, but you know, it is what it is. Example number 2, we have our 930 manipulation and displacement. So at 930 we get our SMT, we displace in the opposite direction. Obviously 950 macro retracement, reverse or manipulation happens. We have a retracement into this BISI here, which also is aligned with this breaker, which is probably a 5-minute breaker, so a unicorn setup here. So we got a unicorn setup here for a retracement to then continue higher, but that is not our entry. You can enter, but that is not our entry. Our main entry is going to be at the 950 macro breaker or inverse for value gap entry. After we get that first retracement, let's have a second retracement. Second retracement is going to be our breaker entry. Enter on this breaker here. This is going to be our entry. Open of the breaker, entry at the open of the breaker, stops below the counter close of a breaker, targeting a 1 to 2, or targeting some type of level of liquidity, so basically buy side. So this would be another example of the model here. Example number 3 is going to be 930 manipulation move. We sweep sell side liquidity here on the sell side liquidity pool. Also at the same time, we are tapping into a 1-minute inverse for value gap, respecting it, coming back higher, and we see we having some seek and destroy market profile here, but that's because we are still in the opening range. So between 9:30 and 10 o'clock is going to be the opening range. Alright, so because between 9:30 and 10 o'clock, this is the opening range, we still have the possibility of our model forming. So between 9:50 and 10:10 is going to be the macro. 9:50 happens, we manipulate a second time, taking out another level of sell side. After we do that, we inverse this fair value gap here, which is a SIBI, turn into a BISI, which is now an inverse fair value gap. After we had that candle close over the gap, we will enter right away on that candle close, stops below the low here, or below this low to be even, give it a little bit even more room. Stops below the low here, letting it run to either buy side or a 1 to 2. That is going to be our low risk entry. This is not the entry that we would anticipate on happening. The entry we would actually be taking, like most definite entry, would be this breaker entry right here. So this breaker was created, okay? This breaker entry, it is a 5-minute breaker, okay? It's a 5-minute breaker. It's not a 1 minute, it's a 5-minute breaker. Our 5-minute breaker gets created, we tap into it, and we would enter at the open of the breaker, stops below the breaker for a candle close, targeting 1 to 2. Example number 4, same thing, 9:30, 9:50, 9:50, and 9:50 again, okay? So 9:30, manipulation happens, we manipulate, or we displace down, 9:30 happens, we manipulate higher into the SIBI, which is also aligned with this BISI, which is an inverse fair value gap, so we basically got a BPR here. We did not take out buy side liquidity, but we did respect this SIBI, so we then displace lower, displacing below this level of sell side here. After we do that, we come back up for 950 macro for a retracement back into this mitigation block and even this breaker, but more as this mitigation block and this order block here, which is also a 5-minute SIBI as well. At the same time, we get that SMT at the highs, which is what? It's a reversal, so we're going to reverse lower now. So because of that SMT plus the retracement into the SIBI, we can anticipate us to be trading lower now. So what do? We wait for that inverse fair value gap to form, that first inverse to form, or that first breaker to form. So that first inverse fair value gap forms, we enter on the candle close off of that candle, stops above the highs, targeting either sell side or a 1 to 2 risk to reward ratio. A second entry we could have done is at this candle right here. After we get a candle close below that, we could have waited for a retracement up back here, enter on the body, the bottom of the body of that black candle, which would have been our breaker, enter on that breaker, targeting sell side liquidity. So one of the two entries. And our final example is going to be the example that a lot of you guys might run into, is where it's not an obvious Judas swing. Okay, so for example number 5, at 9:30 we have a manipulation move from a Judas swing. Okay, so 9:30 manipulation move, we are displacing lower, and for this example, every higher time frame is basically bullish in this example. It's basically bullish, and we basically only have one or two bearish inefficiencies, which price reacted from on the 4 hour and the 1 hour. Only one or two. Rest is bullish, okay? And the whole week has been bearish. Get this, okay? Whole week has been bearish. Friday is the last day, but we were bearish again on Friday. So this is an example of why you need to trust this model and not always trust intraday market profile. Intraday market profile helps a lot. It definitely helps a lot, but it's not going to work 100% every single day, especially during the AM sessions, because the intraday market profile could carry on into the PM session, which it would play out in then. So this is why you need to trust the model. Wait for 9:30 manipulation. Whatever the manipulation or Judas swing is, it manipulated into this 15-minute SIBI and this 5-minute inverse fair value gap. Manipulated into that, respected it perfectly. Came down now, and we created this inverse from a SIBI, which inversed it, creating a BISI, but then we inverse it a second time. This will now be our conditional gap, because it's in the condition of being an inverse, which should have been going the other way, but now it's going the other way again. So this is our conditional gap right now. We displace below this black candle here, which would act as our mitigation block, basically. So because of that, we came back up into here, respected consequent encroachment of this conditional gap. This was our 950 reversal or retracement or manipulation. So this was our retracement into the conditional gap, displacing lower again. 950 macro entry will be at this SIBI. This would be our main entry here. This would be our main entry here. Second entry, or pyramid scaling entry, or if you didn't want to enter off of a BISI or a SIBI and you wanted to do only breakers or inverse fair value gaps, this would be your main entry here, off of this breaker or mitigation block, basically. After you do that, you'll be writing it down to sell side liquidity or a 1-to-2 risk reward ratio. But that is basically how to do my personal, basically funded account model, live account model, and how you can basically scalp the equity open or the macro time based off of this model, and pretty much build your equity up slowly, not quickly. It's not going to be a race, it's going to be a marathon, but slowly, and having a high win rate and possibly high risk to reward based off of this. Okay, but I hope you guys enjoyed this pretty much, I guess, tutorial on how to do my personal model, and I hope you guys can benefit from this. Until next time, I'll see you guys later.